gentlemen, welcome. You have tuned into In Your Interest here on News9 Live. I am Krishna Kumar, and the big story we're beginning this show with is say hello to the brand new ULI or Unified Lendings Interface. After the phenomenal success of the UPI or the Unified Payments Interface, it's now time to see if that can be replicated with the ULI. The Reserve Bank of India's Governor Dr. Shaktikanta introduced the Unified Lending Interface or ULI, a technological platform designed to transform lending landscape in India, currently in its pilot stage. Now, according to Governor Das, RBI expects the ULI to transform the lending scape much like how UPI transformed the payments ecosystem. The ULI is designed to streamline and accelerate the lending process, making it easier and faster for borrowers, particularly those in the underserved sectors, to access credit. Seamless integration of data. The primary goal of the ULI is to simplify and speed up the process of obtaining loans. It does so by simplifying digital information flow between borrowers, lenders, and various data providers. And the ULI facilitates the integration of diverse data sources, including government databases and private data providers. And by integrating various data points like credit history, land records, and other financial information, ULI allows lenders to make more informed decisions quickly and efficiently. And this system will be connecting with Aadhaar, eKYC, PAN database, and account aggregators as well. By combining these various inputs, ULI will reduce the time taken to conduct loan assessments by an extremely significant degree, and particularly mainly for small and rural borrowers. Micro lending is what we're talking about over here. Before we go any further, take a look at what the ULI is all about. All right, we have my colleague Karthik Malhotra now joining us here in the studio. Karthik, talk to us. One is a UPI, as recently has notched up transactions of over 20 trillion rupees in a month, or a 20 lakh crore rupees. It's kind of phenomenal success. It's a global model being, it is being copied by other countries outside of India. It's India's famous exports in the recent times. The ULI, on the other hand, is not as simple as financial transactions, isn't it?
So, I think two words really come to mind, Krishna, when we talk about, and in fact, a third word is frictionless, which Shaktikanta Das had in fact announced in August last year. But two words that really stick out right now for me in this whole ULI story. Number one is transparency. And transparency for the end borrower, who knows exactly what he or she is getting at what terms. And the second is democratization. So I think this is democratization of the entire lending ecosystem, pretty much on the same lines as UPI had transformed and democratized the entire payment transaction space. Now, what I make of this is that, number one, it is still in the pilot stage. So I think disclaimer number one, I haven't been able to see the interface, because I think at the end of the day, any tech platform or any new tech product that comes out, it needs to be easy to use. And I think UPI showed us the way of how quickly, how efficiently, how seamlessly payments can be made. So whether it is by inputting a mobile number or by just scanning a QR code, you can pretty much transact with anybody, any retailer, any person-to-person transaction, or anything that you want to buy online. UPI is as simple as that, right? Okay. At best, a notification comes to you, you click it, open, you enter your PIN code, and there you have it. The transaction is through. Now, in the case of ULI, I think what it really hopes to achieve, and I think given our track record with all digital public goods or digital public infrastructure as it is called, I think our track record shows us that we should be able to cross those multiple loops and those multiple bridges to ensure that the seamlessness is kept intact. Number one, it is going to first digitize all financial documentation of every customer who hops onto the ULI platform, which means your credit history, which you mentioned, your credit score. How well do you rank out of that 900 credit score? What is your ranking? Are you credit worthy at all or not? So your credit worthiness, your credit history, the number of successes you've had in repaying previously taken credit, plus all your other assets which at some point could be monetized to ensure that you are in a position to repay your loan. At the other end, I mentioned transparency. I think transparency comes into being because right now, what is the typical process? As a small and medium enterprise, you want to go to take a loan to expand your business, reinvest that capital to grow your business. There are multiple doors that you need to knock on. The first door is the banks. The banks will check all your credit history, everything else, but then you need to furnish a lot of documentation to prove your creditworthiness. Then there is your credit score. So again, you've got to go back to CIBIL or another rating agency which tells the bank that yeah, this person is eligible for a loan. And then of course the bank itself is going to design a package and offer you a loan at a certain rate of interest, and you as a borrower don't have too much negotiation power. I think what ULI is going to do through this whole democratization of loans and transparency of lending is that it'll give you, the end borrower, a choice, because all your documentation and your creditworthiness is already there on the platform as part of the API pulls that the app is going to do. But you get to choose that, hey, this is what a bank is offering me, this is what an NBFC is offering me, this is what a fintech player is offering me. Right. These are the terms and conditions, and in one screenshot, you're able to very quickly assimilate all the various options available to you, and perhaps it should be as simple as click and get a loan through UPI back in your account.
Right. As Karthik was talking about, this is said to be an open and interoperable platform. The ULI operates an API or application program interface on an app, which implies that financial institutions can integrate into its network in a plug-and-play fashion. An open, interoperable architecture can connect multiple stakeholders, including banks, non-banking financial companies, or NBFCs, and financial technology firms, fintech firms, and other financial institutions as well. Now, ULI is also said to have consent-based data sharing. Now, its platform can have lenders access a comprehensive consent-based digital profile of borrowers, enabling them to assess creditworthiness with greater accuracy. Borrowers can share their information with lenders through a secure consent mechanism. This ensures that personal data is protected and only shared with authorized entities. It also obviously increases access to credit by reducing the turnaround time for loan approvals and making the process more transparent. ULI is expected to significantly increase access to credit for underserved populations, including small business owners and rural borrowers mainly. The ULI platform has the potential to revolutionize the lending industry in India, which, like how UPI transformed digital payments, but by making the lending process more efficient, transparent, and inclusive, ULI can also help bridge the credit gap, particularly for small and medium enterprises or SMEs and rural borrowers who have traditionally faced challenges in accessing formal credit. Karthik, at this stage, it looks like ULI is the kind of online Bandhan revolution, if I may, because what Bandhan did to micro lending, in Bangladesh, and how that model was, adopted across
Bangladesh
the world.
was Grameen Bank. But yeah, I know what you're talking about. I think you're pretty much talking about microcredit. You're talking about these self-help groups which form these little small banks which through this contributory method helps service the requirements of micro borrowers. So I think at one level it is fair to draw that comparison, Krishna, simply because for somebody who is living in a rural area, let's say running a very small corner store, a kirana dukan as it is referred to, or a small vendor selling daily items, really maintaining a formal credit history, especially if the transactions happen in cash, is very difficult. So if that particular entrepreneur, rural entrepreneur, wants to go knocking on a bank's door, it is not impossible or implausible to imagine that the bank is going to turn that person away. Similarly, if you go to an NBFC or if you go to a microfinance corporation, see, NBFCs have higher interest rate than banks because they obviously take on these small borrowers in their books, and they know that the risk that they are running is much higher than banks would, because banks, ever since the cleanup of the NPAs has come into action, banks try to turn away small borrowers, right? NBFCs, on the other hand, still accommodate them, but the microfinance institutions like Grameen Bank, offer credit at a much higher rate of interest. Now, the problem with all these models is that there isn't one single platform that tells you everything you as a lender need to know about the potential borrower. With ULI, I think all that documentation and the digitization of the documentation pertaining to the financial assets owned and the credit history of the potential buyer just comes right in front of you. So on a rating of, let's say, 10 or 900 or whatever, what the potential of that person to repay the loan really is. And on the basis of that, the borrower now has the advantage to choose between the various lending institutions on the basis of rate of interest, on the terms and conditions, on the key fact sheet, documentation that, yeah, this is the loan that I want to take, and go ahead, click and get the loan.
Right. Thank you for correcting me over there. The Grameen Bank in Bangladesh, at a time when Dr. Mohammed Yunus is now heading the country. That's the power of microfinance, if I may. And you rightly pointed out the fact that the big banks of the country have been found wanting when it comes to, that's the reason why you have a term called underserved sectors. That's right. That's because we might be having some of the biggest banks in the country, but they are choosing to stay away from certain sectors for multivarious reasons, their own bottom lines to start with. But do you think that at this stage, Dr. Das has announced the fact that the pilot stage is already in progress. It's been in progress for nearly over a year now. It's been a year since that's been happening. So which means that there is no timeline on when exactly it's going to be launched. Going soon. But the moment it comes, considering the success that UPI has had in terms of handling the volume of transactions, without too many breakdowns, with one of the most seamless integrations possible across payment platforms, and that seamless integration and that platform's ability to handle volumes will be crucial for ULI's success.
You're right. So I think when it comes to data management, when it comes to managing this large scale of transactions, both in volume terms and in the pure number of transactions happening parallelly across the country in different pockets, I think there is resident experience with NPCI governed by the Central Bank, the Reserve Bank of India, in ensuring that the tech is available and the tech is tested to make sure that those transactions don't fail. Right. And I think in any financial transaction, the success rate of the transaction going through is absolutely paramount. Right. Having said that, I think UPI, and I'm a big fan of UPI, don't get me wrong, but we
all are.
We all are. And data tells us that, I think 40% of all transactions that happen in India happen digitally today, as opposed to just that number being 10% pre-demonetization of 2016. Almost 80 to 90% of all digital transactions are UPI. But the skeptic in me also believes that UPI is perhaps a once-in-a-lifetime hero product. Right. It is very difficult to replicate that scale of success every time you launch a new product. For example, we have seen the RBI running pilot phase projects of the central bank digital currency or the e-rupee. Right. We've been talking about it. In fact, we've done stories on that. Krishna, you've done stories on that as well, where we haven't really seen CBDC really become a tool as popular as a UPI. Nowhere close. So I think it continues to be in a pilot stage. At the end of the day, it is easy to monitor and manage transactions from bank to bank because there is a central governor for, and a regulator for those transactions, which is the RBI. If RBI tells all the banks to do it, you go ahead and you do it. In the case of lending, you have banks, you have NBFCs, but you also have fintech. So, the point is, we don't know for sure, is RBI the regulator for fintech platforms as well? Right. So overall, I think replicating the success of UPI is going to be difficult.
Fair enough.
But we have tried and tested knowledge available, and we have the tech play absolutely plug and play available for this to be able to ride on those past successes. If not replicate it, at least function efficiently. And I don't think the transaction space, the kind of volumes that you see, you will not see anything close to that in the lending or borrowing space. But yeah, at least I think the tech and the plug and play availability is something that we should not worry about.
All right, we have a good chance, but we'll have to see. But with that, we need to take a short breather here on the show. We'll be back with lots more on the other side. Keep it with News9 Live.
Not quite lived up to their pre-tournament billing, delivering a series of less than convincing performances. For 2 draws and a solitary win.
Your son will be Messi. No studies, just football all day. Go my son, go. Make my face shine through playing football.
Not only your face but also the country's. I will conquer the world by playing football. Come, let's go to Germany.
World's largest football talent hunt, News9 Indian Tigers and Tigresses, in association with DFB Pokal, Bundesliga, BBB and India Football Center. Train and play matches in Europe. Register now and fly to Germany. IndianTigersandTigresses.com.
Hey, careful, huh? My daddy got it from abroad. Disaster! How will you pay for the loss now?
In stock market, you should take risk as per your capacity and knowledge. Trade in options very carefully.
Wow, Dikra! Absolutely perfect! Take risk with full understanding.
How do you fulfill that promise? Because ultimately expectations have to be met. If you look at the political landscape, is it really changing for women? And what is the inability of the forces that dead bodies surface but not the living people?
So I'm Payal Nath, the CEO and Director of Kadam Heart. We're working with people, we're working with emotions, we're working with hands, we're working with nature.
We are very clear, we want to commit to livelihoods. We want to commit to the planet. We want to impact 1 million artisans, which is 1 million families minimum.
Be the change that you want to see.
This and more. Streaming on News9 plus news is now content. Subscribe and get free vouchers.
You are watching In Your Interest. I'm Krishna Kumar and putting the focus here on the Unified Pension Scheme or UPS. And we're asking the question, what's in it for you, all those of you watching? We have Dr. Shaktikanta, policy researcher and corporate advisor, now joining us for that. Before I come to you, let me quickly put it into context as to what we're discussing over here. One is really simple. It is supposed to incorporate the best elements of the OPS, the old pension scheme, and the NPS, or the National Pension Scheme, popularly known as the new pension scheme. It has assured pension, assured minimum pension. There are several factors that have been mentioned. But Dr. Shaktikanta, net, for all those who are watching this, is this pension scheme, the new pension scheme, or the UPS, Unified Pension Scheme, be the right kind of UPS for people in their retirement?
Krishna, the question should be, should it also be rolled out to the rest of India, not just the government servants? I think that will be a fair question to ask. The UPS seems to be a far pragmatic one simply because it is funded. There is no open-ended challenge that your worries that at some point in time in the future, will the governments need to fund any shortfall? No, none of those. It is funded every year, but on budget. It's called as on-budget provisioning, which means every year in the union budget, we have to see for a line item which will say what is the amount that is going to fund this. This year, the envisaged, I think, 5,500 crores. On a large budget, it is a very, very small proportion. I want to give a corporate analogy. When we use the word called cost to company in the corporate India, we talk about salary, we talk about basic pay, we talk about HRA, we also speak about the contribution to PF and gratuity. Very similarly is this UPS, that everything is factored into the government's contribution as well as employees' contribution. So in that sense, it's a good one. And now the challenge is going to be how will PFRDA, for example, the regulator, the pension regulator, make NPS attractive enough for the rest of us as citizens for us to use that. That's going to be the larger challenge. And I think there is no answers at this point in time, because we don't have innovative product schemes so far.
Right. The fact that you have this pension scheme now, because there has been a fair amount of criticism about the new pension scheme or the national pension scheme. But the question here is that the going forward, how do you see the adoption or the move to the UPS?
See, I don't think there's a problem, but one of the challenge politically is everybody will question, is it because of the state elections coming up? Looks like it, because this is the first time, if you notice, they've actually rolled back something that the first BJP Prime Minister, Shri Atal Bihari Vajpayee's pension scheme, the reforms that were done, that has been rolled back kind of sorts. That's one. Two, the UPS is again an amalgamation of various schemes. It is not a fresh one. If you remember, this government had criticized the opposition parties for bringing in OPS in various forms. And this is again, the question is it a old wine in a new bottle of sorts? The challenge is yes, the answer seems to be yes. It is, in our Zoom parlance, a hybrid pension scheme, but it's a good pension scheme. So that is a good sign. It is funded, there is no shortfall, there is no gap. But the challenge is going to be if your company's size, which means the number of employees that the government will have on its payroll as the years roll by, is it going to increase the annual outgo of pensions and the contribution of the government of India? That is the question. And more importantly, what happens if, let's say, almost all the other states adopt the same method of they roll out UPS in their states? What is going to be the cost to their exchequer? That will be another question that we need to watch out for. At this point in time, too limited data on the states. If all of them adopt, I think it will be interesting ones.
Well, if all of them adopt, it will be an interesting one. But this pension scheme, in the sense, the two things that stood out for me at least was the fact that there's going to be inflation indexation. There's going to be the dearness relief as well. Those are crucial factors that are going for it, isn't it?
It is. But the challenge is going to be you're almost promising 50% of the last drawn salary. That's a big one. And what happens if, let's say, the returns, when I say returns, I'm talking about various asset investments, stock markets slow down or debt schemes slow down. At those points, who is going to fund those shortfall? And I think that's an open-ended question as we speak at this point in time. There are no answers at all.
Again, for those watching, I'm asking on behalf of all those people watching, people who have put money into the national pension scheme, what should they do now?
Krishna, I think the jury is out, right? I mean, can we move, all of us moved from NPS to UPS, and I want to draw the Tamil Nadu analogy, right? I mean, if you remember the different politicians with EPS, OPS and all of that, it seems to be a rerun of those, but for a pension scheme today. I think my suggestion would be, I think there is no one size fits all. I think if you have to think like a financial planner, you would have to look at your own risk capability and the age, because UPS is defined by the number of years of services and the contribution that will happen. So what is applicable for different people will vary with outcomes. So there is no one size fits all. And also the taxability angle is also very, very different.
Okay, so net, what are you telling us? Should we stop?
I think very simple. UPS is a better scheme than OPS because it is funded. That is very, very important aspect. You're not leaving anything open to chance or to next year or later fiscal gaps. Two, I think very, very simple. You know what is the government contributing and what the employees are contributing. So there is skin in the game for the employees as well. Three, I'm saying that look at this not as government's freebie to the government servants, public servants. Look at it as cost to company that the government of India is going to pay for the compensation package. So if the corporate India can say CTC, why can't government also say CTC? I mean, that's how I would defend this as a great idea that UPS is a good one. Look at it as CTC, don't look at it as free dole-outs.
It is an interesting time that we're living in. Everybody is figuring out how to deal with the rising living costs, planning for retirement. There are no simple answers to it, isn't it, really? Because at the end of the day, if inflation continues to grow at the rate at which it has been for the last decade or so, it's going to be whatever you think is going to be your nest egg or whatever you think is going to be your corpus that you can retire with is going to be extremely difficult to assess.
Krishna, very, very valid. And I just want to draw on one of the large demographic risks that we will have in years to come, right? I mean, today we enjoy the benefit, or we've been enjoying the benefit of the young demographics or demographic dividend, as we call it. But beyond 2040, our aging population is going to start increasing. So who's going to pay for, we don't really have a social security net or a healthcare net, right? I mean, who's going to pay for what I call as services inflation? Food, healthcare, and the cost to take care of yourself, which means whether you have the middle class and upward having a driver or a domestic help or whatever. And those inflation rates are in 2 digits. They're not in 6% or 5% at all annually. So how are you going to fund that as you grow older? And humans, all of us are living longer as well. The average Indian age today, anecdotally, is about 80. So which means that if you retire at 60, if you're a government employee, and in the private sector, you're also at the risk of being forced to retire much more earlier because you're outskilled. You don't have the relevant skill. So how do you make that money work for the subsequent 40 years or 30 years of your life? And I think that's a larger challenge. which I hope our pension regulator kind of puts out a vision document saying that
Right.
how do they see this pan out. Today, if you ask anybody, is this money, say if you have 4 crores, I mean, there are a lot of these floating around, right? If
Yeah.
you retire with 4 crores at 6% interest rate and all that. But we are not adjusting for inflation, we are not adjusting for income tax, and we are not adjusting for all the taxes we pay, the GST and works. So, what is that relevant money for you? There are no answers. I think a pension scheme should also address all of that holistically rather than look at just Excel sheet.
Right. We need to find holistic answers to retirement. Dr. Srinath, thank you so much for taking time out to be with us here. And with
Thanks,
that,
Krishna.
we've completely run out of time here on this edition of In Your Interest. Thank you so much for watching. This is Krishna Kumar signing off.
Big fan of Ian Bell, watching him very classy in all formats.
I find Durban quite a challenge, which is still an enjoyable one.
You're not allowed to bowl a bouncer, so that tells you that they want to see runs on the board.
बड़े अच्छे अच्छे टूर्स किए हैं, बड़ी अच्छी अच्छी यादें हैं हर जगह की, जहाँ मैंने पर्सनली क्रिकेट को बहुत एंजॉय किया है. ऑस्ट्रेलिया एंड इंडिया में बहुत ज़्यादा एंजॉय किया.
I love playing again England and India, and they were both very different challenges.
Up close and personal with legendary cricketers like never before. Icons of the pitch.
This and more. Streaming on News9 plus news is now content. Subscribe and get free vouchers.
For the very first time in our investigation, we unmasked the killer of Ravindra Matre.
In 5G, we have to stand with the world, and in 6G, we have to lead the world.
Winning a Grammy was an absolutely surreal experience.
And Muktiwani Yoga was aide to Sheikh Mujib came to my CEO. It told him that the family of Sheikh Mujib under